Hello and welcome back to another episode of RE Radar. Once again, I'm your host and realtor, Nathan Matheson. And what we discuss on RE Radar, of course, is educating people on real estate knowledge. And one of the biggest reasons or one of the biggest ways to do that is through checking out what happened in the market. So it's December now, and we haven't yet done the November real estate recap. So that is what's on the docket for today. Going to be checking out what took place over November in Seattle real estate wise. Was it a hot market? Was it a cold market? What took place? And this is looking at what's actually happening. We're not doing the doom and gloom headlines that you'll read. We are looking at statistics here and just diving right into those statistics. We're going to start off with price because, well, let's face it, price is king. Price is what's most important to just about everybody out there. And so for November, the median sale price for residential homes and condos in Seattle came in right around 860,000. Now that is down a bit from October where we saw it at 895,000, but remember that is totally normal for this time of year. Real estate, let's face it, it has seasons just like the weather. And once you hit those final couple months of the year, prices will always soften a bit. They always do. It's like clockwork. Now, the more important statistic or more important number point to look at, I feel, is comparing to last year. So, year over year, well, last November 2024, the median price was about 817,000. So, we're actually up 5.2% year over year for median sale price. Prices are holding strong for sellers. That's what that shows me. Now, new listing wise, so how many new listings came onto the market in November? And Seattle saw 672 new listings, which, well, that's about half of what we saw in October. But again, this is totally seasonal. You get to November, you got Thanksgiving. People don't want to list then during the holidays. But compare it to year over year, well, 2024, it's up 27% from November in 2024. That's a huge sign that the overall real estate market, it's in a much better place this year than it was last year. And that's good. Now, checking in on pending sales. Are the buyers out there? Are people getting under contract on their homes? Or are they just stacking up there, getting on the market and sitting there forever? So, looking at the pending sales, what went under contract in November, it saw 598 pending sales. That's up 4.7% year over year, about 27 more homes than last November. So, not as dramatic as the new listing growth, but still, it is moving in the correct direction. So, more people did get under contract this year than last November. Now, total homes for sale, what's out there on the market? What's the inventory like? What are buyers looking at? And at the end of November, Seattle had 2,066 homes for sale out there, roughly 400 less than October, but 39% more than November of 2024. So, again, a much better place inventory wise in 2025 than 2024. And that extra inventory is exactly why buyers today feel like they can breathe a little bit again. Buyers are getting a little more advantage as well. There's more homes out there for them to look at. Now, days on market, how long is it taking people to sell a house? Well, median days on market for November was 19 days, which is up about 12% from last year. So homes, well, they are sitting a little longer. They're not stale. They're not lasting months and months. They're just, sitting for a couple weeks, for a few weeks. And that's totally normal. And that helps you get to a much more balanced, fair market for both sides. One of the reasons homes could be sitting a little longer is, again, go back to inventory wise. Look at it. There's more homes coming out now than there were last year. So buyers, well, they have more options. They have more things to look at. And they feel a little less pressure right now than maybe they felt last year. So they're not rushing into these offers. They're taking their time. They're doing their due diligence, which is a great thing. And then they're making these offers on homes after the second weekend, maybe. Now, what do all these numbers mean? Well, if I really had to sum up the real estate market in Seattle, well, it's not crashing. Prices are still rising year over year. Homes are still going under contract. There's activity. Buyers are out there. But again, buyers, they're getting a little more leverage than they've had in the last few years. We're in one of the most even, fair, and sane markets Seattle has seen since before COVID. Sellers, they're still getting strong prices, but buyers, they can actually negotiate and not feel like they need to just sprint into open houses and write up the offer the minute they leave those open houses with huge escalation clauses. They're feeling much more relaxed, much more in control. And that is a win win for anyone out there. And so, for anyone out there that's yelling about some upcoming market crash, like I've touched on with some Seattle Times headlines, that's not what the data is showing. The data is showing here that this real estate market is in a solid spot. Now, maybe other markets across the country are struggling a bit more. Well, yeah, I believe that's totally factual. I mean, if you look at it from this point of view, in Seattle is a place that is consistently growing, is consistently drawing people to them. I mean, in Seattle, you've got a lot of high paying jobs, you've got economic growth, you've got beautiful nature as well, which can bring people up here. And so, for that, compare that to a rural market out there in the middle of nowhere. Well, that middle of nowhere market might very well be seeing a much more drastic dip than anyone in Seattle could be seeing. So, Seattle, real estate wise, it's in a pretty solid spot, much better than last year. And we'll see what 2026 brings us. Now, another key component, of course, with real estate, you got price, but then you've also got interest rate, which effectively helps determine your monthly price, what you're actually paying. And the rates in November, they stayed in a really healthy range. Between 6.1, 6.4% for the most part was what I was seeing day after day. And honestly, that's just a great spot to be as we wrap up the year. And my expectation, and remember, that's just an expectation as well. Nobody can predict mortgage rates. But as we head into early 2026, what I think we could see rates flirt with is in the high 5% range, maybe by spring. But again, predicting rates is like predicting Seattle snowfall. You can make a guess, but well, nature and the Fed will do whatever they want. So the point here is, well, there's little reason to think, based on everything I'm hearing, economic data and all that we're suddenly going to shoot back up to 7% mortgage rates anytime soon. But also, we're not going to be dropping like a rock like some buyers might be thinking. That's kind of delusional. We're not going to be going into 4%, 3% mortgage rates anytime soon. Rates are really likely just going to stay, I feel, in that happy middle spot of around 5 to 6% for maybe, the years to come. As when you get too low, it causes issues. And of course, too high, well, then affordability becomes impossible. So 5 to 6% is really that sweet spot, in my opinion, with what mortgage rates likely will be for a while. Now, the Fed did just recently meet. They met last week, December 10th. Well, December 9th and 10th, but December 10th is when they made their announcements, and they announced a 25 basis point rate cut to the Fed funds rate. And that was pretty much expected. That's what people were predicting. So it was already baked into the mortgage rates ahead of that announcement. So no drastic cuts happened to mortgage rates. And a few other takeaways from that meeting. Well, Fed leaders, they expect more economic growth in 2026. They are, though, keeping an eye out on the slower labor market. So we'll see what that all takes place. Powell also made a point of saying that AI chatbots aren't replacing human jobs the way headlines might make it sound yet. Tech layoffs, they make noise, but overall layoffs across the entire economy remain relatively low. So Powell's term as Fed chair, also of note, ends in May, and President Trump will be choosing his replacement in January. And for the first time in years, we saw a real split on the board. 3 members actually voted against the rate cut. That's the biggest divide since 2019. Now, Powell said his focus as he wraps up his term is getting inflation back down to 2% and keeping the labor market strong. That's where policy is aimed. So just wrapping up here, my takeaway, ignore the headlines. Every real estate transaction is unique. Even 2 houses sitting right next to each other, they could have completely different outcomes and completely different values. So if you're thinking of selling or buying, it might actually go a whole lot smoother than the news makes it sound. All they are is a bunch of negative Nellies out there painting this horrible picture for the real estate market. Well, I don't believe them, and neither do basically any real estate profession in the actual business that I've talked to. Seattle, especially, has consistently brought in new people with strong incomes. And if your home is in good shape and in a desirable area, well, it might very well sell in the first week or two still. On the flip side, fewer people are out there listing homes during the holiday. People aren't looking to make a big move in December and during the holiday season. They've got all sorts of other things to focus on. So they're not doing that unless they have to sell for a specific reason. And what this means is, well, buyers, they aren't seeing the same volume of new listings coming onto the market as they do in springtime. But with this happening and with there being less activity out there, buyers are gaining a slight advantage now, or at least more of an advantage than they've had in the last decade, essentially almost. And with that comes more breathing room for the buyers, more negotiating powers, and a better shot at getting a better deal compared to the frenzy that you might see in March, May, April, June. So that is where we're at today. A market that's active. There are deals going on, there are listings coming on, but it's calmer, steady, and more fair for both sides. Now, that's all the time I've got for this episode. If you want me to talk you through your specific situation, I'm always happy to help. Reach out anytime. But aside from that, thanks for listening. Thanks for watching. I'm Nathan Matheson. Peace.